It's your boy back again with Step Index. I love this synthetic indice. Now, when it comes to trading, as you've seen the risk disclosure, I am not a financial advisor and don't give people advice on what to trade and what not to trade or how to trade it. I'm not a financial advisor, guys. You can lose money following advice online, especially here on YouTube. I'm just an educator. That's what I do. I just talk about price action. And of course, whatever that I discuss here on YouTube channel is for educational purposes only. So let's get into the business. First of all, what I want to talk about is trading view. This is what we're looking at. Hey, trading view and deriv, they have cooked. They have cooked here, my guy. So we're looking at the trading view platform. It has step index on a daily time frame, as you can see here. What I like about this platform is the alert system that it has and the C trader. C trader is the brokerage account that you can trade here on deriv. Unlike trading on your phone, which is not really useful because you can't see the entire data of the day, like you can't see like 3 days ago. But here on this platform, you can clearly see we are seeing price action way back from October 2025. So you get a lot of room for your charts. Okay, so that's what I like about this platform. Number 2 on the list, we've got the time zone. The time zone is an issue that I can tell you because on my phone, on my MT5 platform, if I zoom in a little bit, you see this particular day here, it says that it is Tuesday, and I can tell you that it's not Tuesday, it's still Monday, but here on deriv, it has opened a new trading day. So you need to be careful in terms of the time zone issue because it can really affect your trading. So you need to be careful in terms of, looking at the daily time frame. You have opened for a new trading day. However, it's still Monday. If you look at your platform on your MT5, we are still on the Monday. We've got a couple of hours before a new trading day begins. So I don't know why deriv and TradingView messed this up, but it's not really a big issue. What is a big issue is where I am situated. I'm situated in Johannesburg, South Africa, which we have a lot of load shedding that is going on around this time of the year. It is the mid-year. Mid-year, it's cold, it's winter. The politicians have a hand in this load shedding thingy. They want us to vote, they want us to vote. So they switch off the electricity so that we can vote, we can make a change with the voting that we have going on. But nonetheless, it's not really an issue that much, but it's going to impact my schedule of dropping videos. So do not expect videos to be uploaded on a daily basis or on a weekly basis. That's not going to happen. Okay, I'm not promising weekly videos, but whenever I can, I will provide something. So now that's out of the way, let's get into the business. Okay. I know, man, it's been a while. It's been a minute. Actually, it's been like 6 months. The last commentary that I did was in December last year. So 6 months, I've been absent. I've been honing my skill. I like to let the first 6 months of the year go pass by. And after that 6 months, I come in here in June to see where we are, in terms of the lay of the land, how the market is performing. So that's where we are. The first thing that I want to talk about is the general commentary that we're going to be doing this year. We're going to be doing intraday trading. Intraday? Yeah, intraday means that we're going to be scalping majority of the time. We're not going to be holding trades like last year. If you look at last year's commentary, I was doing a swing trading model, which was really nice actually because it fit into my trading schedule. I have a job, so the job does not permit me to trade any time of the day that I want. So hence why I'm doing scalping. And the session that we're going to be trading is the PM session. We'll get into that in a moment. So yeah, as I was talking about the job that I have, which does not permit me to trade any other session, hence why we're going to be trading the PM session. Why do I trade the PM session? Well, as I said, I don't have the luxury of trading the other sessions. I'm at my job around those times of the day, so I don't get enough chart time. The only time that I got is when I get off work and it's really late. You know, the PM session is really late. So yeah, it is what it is. If we can see here on the daily time frame, I'm hovering my marker on the market open. As we can clearly see that we have about a few hours before the new day begins. As I've said, the new day has not yet begun. Okay. So we have about a few hours before the new day begins. And around this particular time, that is when I will be available for the charts. Now, I'm going to be limited in terms of my risk. In terms of my chart time, I'm going to be limited because the PM session does not move that much. The day had already been progressed. A lot has happened, like the London session has passed, the New York session has passed, and now I'm coming into the PM session, which I'm just coming for, scraps of bread, That's all that I can say about the PM session. There is a lot that I can teach you in terms of trading the PM session. Until then, I will let you know when my schedule changes. But I will trade there and there. Like I will trade the London session and I will post about it the following day or in the same day. All right. Enough chit chat. Let's get into step picks, right? So we have a daily time frame here, and get the previous 6 months. So now it is June. If we look at the opening of the year, which was in January, so January is somewhere here, we can clearly see that the primary trend has been bullish. We've been making higher highs and higher lows. But the way that we have been moving with our trend to the upside, it's not really enticing to trade because it's moving in a high resistance liquidity condition, meaning that price is having a difficulty. It's fickle, man. It's not in a hurry. It's in a hurry to move significantly higher. So that is a high resistance liquidity condition. Intraday is nice in this condition. If you're patient, really, really patient, then you can look at the last year's commentary that I did, which was a swing trading model. It was really nice. So you can attempt a swing trading model in this appendix right here. But in the past 6 months, I really discovered that I am a scalper. Yeah, I am surprised too, man. Like, being a scalper is nice. You're in and out of the marketplace. You don't have to wait a lot of time before you can execute your trade. And essentially, you can get the results that you're looking for in a few minutes. Okay. I'm not enticing you to trade that way. Hear me very well. I'm not enticing you. I discovered that I am impatient, hence why I'm doing scalping. So now that's out of the way, um, we are looking at the step index on a daily time frame. It's the middle of the year. We have a mega trade that tends to happen in the middle of the year. Price action tends to reverse. So we are going downwards in terms of our bias. And if we are going downwards, where is the liquidity? That is the number one question that I like to ask myself around the mid year. Okay, around this time of the year, that's the first question that I ask myself, like, where is the liquidity? So I look at the past 6 months, and the past 6 months will give me a general idea as to where the liquidity is situated. So, what is the liquidity that I'm looking for? Well, it is generally congested levels. Congested levels meaning relative equal lows. That's what I'm looking for. Okay. So, besides this consolidation, which is obvious, we have the resistance and then we have the support. Down here, which is the support, we have the June 5th low here, which is the first target that I'm looking for. Below that, we have the May 11th. You can clearly see that the May 11th low is pretty close to this one, the April low. So I'm going to add a line right there, right there. As we can clearly see, we have these as relative equal lows. See how easy that is? It's really easy looking for liquidity. You just look for congested levels. So that's the easiest one here that you are able to see visually. You don't need this line here. Okay, we don't need that. And down here as well, we have relative equal lows around March and February. We have these relative equal lows. That's what I'm looking for. Now you know the bias that I have. What makes me convinced that we are going to the downside? That is the second question. So I am really looking for ideas that support price action going to the downside. Why am I fixated on price action going to the downside around this time of the year? Well, number one is that liquidity that is nested down here and here. And of course, we have this January low, which is a single low down here. Okay. Besides all of these relative equal lows, there is the buy side liquidity that we just took most recently in May. Okay. We took out the December high, which was right here. See that? That high right there has been taken. Now, a lot of people, when they come into the marketplace, maybe around May and June, they really think that price action is going to continue going to the upside because price action has been going up, right? It has been making those higher highs, but there is a problem. The problem is we have a reversal at our hands. This reversal, which tends to happen in the middle of the year, is problematic to those guys that think that price action is just going to continue going up, right? I may be wrong, hence why I'm looking for these ideas that support my bias. So this is the number one reason why I am fixated on price action going lower. We have took out the buy side liquidity. After we took out that buy side liquidity, we left some inefficiencies. This inefficiency is being printed on the 18th of May. Let me just zoom in a little bit. Okay, we had that and that. Okay, so this, let's add a style, the middle line. The middle line here is the consequent enroachment of the inefficiency. Whenever price action does not reach that 50%, it means that price action is bearish. So that is order flow. Order flow is telling me that, hey man, I don't want to go above that 50%. Or this is how I should put it. Price action is not allowed to go above the 50%. Because now we have shifted our bias. We are bearish. When we are bearish, we are looking for these inefficiencies on a higher time frame to support our bias. So how does price action perform inside of these PD arrays? And as you can see, price action does not spend a lot of time inside of that inefficiency. And if you look at that inefficiency, look at the timing of it. It is being printed around the 20th. So around the 20th of May, which is basically recycling last year's commentary with the swing trading model. This is the fair value gap that we would be looking for. Around the 20th, we wait for price action to come back into that inefficiency. And the confirmation or the confluence of this inefficiency that we're looking for is the consequent enroachment. Price should tell us that it does not want to go higher. And how does it do that? By the consequent enroachment. So order flow is bearish, and we had printed another inefficiency right there and right about here. So we are utilizing these two inefficiencies from May's price action, which it is telling us that it does not want to go higher, and it does not leave any candlestick bodies inside of the fair value gap. Now, whenever I see that, that is a confirmation for a bearish bias. So now that we've established a bearish bias on the daily time frame, we know where the liquidity is. We have supporting structures on the daily time frame, which is telling us that it does not want to go higher, by the candlestick bodies not wanting to reach the consequent enroachment of those PD arrays on the daily time frame. I know that it's going to be a bit difficult, maneuvering inside of this consolidation. It's going to be a lot difficult. So as I said, we are in a market that is fickle. It's very difficult to maneuver. So let's drop down into the lower time frames. Let me go ahead and delete that because we're not going to need it when you get down to the 1 minute time frame. The 1 minute time frame. Nigga, you're going on the 1 minute time frame? Yeah, I'm going on the 1 minute time frame, buddy. That's where the money is made, okay? So we're going to be looking at today's price action. And there are times of the day that I will talk about, but primarily I want to focus on the PM session. Okay, the PM session, remember that. So let me unzoom. Okay. So this is the day of today, right? We begun the day right around here, right? And when we began the day, price was bullish initially. It was going up to attack the buy side liquidity here. Now, what is the buy side liquidity pool that is situated here? I'm gonna switch my time zone to New York because I don't like to use my Johannesburg. It really confuses me. I like to use New York. Now, where is New York? New York is right here, which is -4 New York, okay? So around this time of the day, this is the previous day, by the way, we had the PM session, right? So when we began the new trading day on the 22nd, we went up, right? We went up and we attacked the buy side liquidity of the PM session. Okay. Now I'm going to zoom in a little bit. This is the first session of the day. It is the London session. Okay. So here is the first session of the day. Let me zoom in a little bit more so that we can clearly see what's going on here. So this line here that you're seeing is previous day PM session liquidity highs. This is the initial highs of the day. We took out the buy side liquidity, and London session begins at 1 o'clock New York local time. I just switched my time zone to New York. So New York, 1 o'clock, that's when the London session begins, right? So London session begins here, and price action, it goes up where? It goes into that buy side liquidity pool one more time. Now, why is it doing that? When it goes up like this, who is being trapped into the marketplace? That's the question that I'm asking myself whenever I'm looking at the 1 minute time frame. Okay, I have a bearish bias and price action is going up. Where is it going? PM session, previous day's liquidity. The buy side liquidity of yesterday, the PM session, is being attacked in the London session. Now, when price is doing that, it's going up aggressively like this. A lot of traders are thinking that, oh man, price action is going up. It has broken these resistance and it's going up, right? But price action is just going up there to probe the buy side liquidity one more time. Okay. So what am I looking at here? This lipstick delineation that we are seeing here. I have drawn out the opening range for the London session. So this is the opening range. It's from 1:30 to 2 o'clock. Within this 30 minutes, I'm looking for a fair value gap that supports my bearish bias. Okay, so we are just taking out the buy side liquidity and we print this displacement to the downside, which has a market structure shift and a fair value gap. Okay, this fair value gap, that's the one that I would trade if I was trading the London session. Now, this 30 minutes window, that's when I'm looking to enter positions. Now, keep that in mind. All right, keep that in mind. That is when I operate in the marketplace. So let's move along. Price action uses that fair value gap. It goes to the downside, right? And in the 5 o'clock hour, 5 hours into the London session, it gets to the London lunch. London lunch, as you can see, it is consolidative. It is consolidating. Now, price action pertaining the London lunch can reverse or it can consolidate like this, or it can continue going downwards. Okay, you need to be careful around the lunch hour. After the lunch hour is done, we have what we call the New York session open. It opens at 6 o'clock. Now, in this 6 o'clock, remember that price action was consolidating in the London lunch. So the New York opening session, it is displacing, it prints this inefficiency. You can't miss it. It's huge. Even when I'm looking at the 1 minute time frame, it's huge. This inefficiency right here. So I'm going to add a little bit of lipstick in that New York session fair value gap. Now I'm going to change the color to this. To this. So that is our New York session fair value gap. Okay. Shortly after, we had the New York opening range. It is 30 minutes as well. As you can see, it is retracing back to that New York opening session fair value gap. Now, as I said, within these opening ranges, I am looking for a fair value gap that I can trade, right? But when price action is retracing like this, it's going against my bias. I don't trade when price action is going against my bias. All right. So price action goes up into that New York session fair value gap and it fails to go up. It fails to continue going up. Well, we have a bearish bias, remember. And around the 10 o'clock, here is the 10 o'clock. 10 o'clock hour is the second round of New York session. Well, remember that in the real world markets, we have a New York session, right? So New York session has news releases. Those news releases, the first round of those news is around this time, which is 8:30. 8:30, that's when we have the first round of the news release, which tends to be very volatile. But here in the Riv, you can clearly see that it's not much of a problem, really. So it's just gyrating, engineering liquidity, or it is retracing into an inefficiency. But nonetheless, we stay in a consolidation. As I said, we are not in a hurry to go somewhere. Price action is waiting for the 10 o'clock hour. Now, the 10 o'clock hour, it retraces again into that New York session fair value gap. That New York open session fair value gap, yeah, that's the one. We retrace back into it. And after that 10 o'clock hour, we have what we call the New York lunch, which starts from 11:30 and it ends around 1 o'clock or 1:30. I'm not really sure about that one, but it's usually an hour and 30 minutes long. So we have that retracement one more time. It fails to get to the New York fair value gap. Now, the New York lunch failing to get to that New York fair value gap, it should tell you about that order flow. And in the 10 o'clock hour as well, that 1037 high that you're seeing there, it is in the lower quadrant of that fair value gap. It is in the lower quadrant. It's telling you that, hey man, yeah, it's the 10 o'clock hour. We really should be volatile, but we don't go any higher than the consequent enrichment New York session fair value gap. So that is order flow. And that order flow is telling you once more time, I don't have strength to go up. So I am bearish. Okay. And the last session of the day, it is the PM session. All right. So the PM session, this is when I will be available to trade. Now, If I unzoom a little bit, right? If I unzoom a little bit, today has been a bearish market. The bears have come into the marketplace and they have dominated each trading session. Okay. So the last trading session, which is the PM session, if we had a big down day like this, where the London session was pretty much bearish, the New York as well, pretty much bearish. When it comes to the PM session, I will not be trading if we had a large range day like this. The only time that I will be trading the PM session is when the market is providing me with ample opportunity, meaning that the PM session still has some range, some range to attack the liquidity or inefficiency. That's what price action does. It attacks liquidity or it moves into inefficiencies. So if those inefficiencies have not been tagged before that PM session, well, that's when I will be available. But we are coming into the PM session and we have already moved a lot. So guess what? I won't be trading the PM session. I will skip it. Okay. So the PM session is a consolidation. As we can see, it's not really moving around that much. Okay. So the PM session here, we need to be careful trading it. Okay. So for this first video of the year, that's all that I have for you. I was just showcasing the order flow on the daily time frame, the buyers, and coming into the 1 minute time frame, I was just showing you the times of the day that are available for you to trade. Now you can trade the London session, you can trade the London session or the New York session, whatever trading schedule that you have, you can make use of it. But for me, I'm going to be trading the PM session. Now, when I come into the marketplace, look at this, man. Price action moved a lot. So I will be missing a lot of trading opportunities, which is a bummer. It's really a bummer, man. Because the New York session is really nice to trade. The London session as well is nice to trade. But I'm not available during those times. So it is what it is, man. I'd rather trade the PM session, right? Knowing that I have my full attention, nothing can disturb me around the PM session. No phone call, no unexpected visitors, no distractions. It's just me and the charts. So yeah, watch out for those PM session trades that I will be posting from now on. That is all that I have for you in this video. Cheers.